Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Phil Mackintosh, chief economist at Nasdaq, for an update on the latest COVID-19 news, the U.S. and global economies, and how markets are digesting the progress of reopening the economy. And despite many economies still running well below capacity, industrial metal prices like copper have all rebounded back to or above pre-COVID-19 levels. And Phil, this kind of quietly happened behind the scenes. And before we get into that, if we take a look at the latest COVID-19 data, it's a little bit counterintuitive to see the run in these metals with cases significantly on the rise.
Yeah, and in this chart, we're just looking at the US cases, but obviously global cases are on the rise still as well, with a lot of emerging markets still experiencing pretty significant growth. But the US is significant just because it's a big economy. And the cases last night hit 60,000 for the first time, which is a huge number of new cases for a day. And if you look at the sort of run rate we have per million in the population, the US now has more cases of COVID per million people than any other country. And that's probably a more safe or fair way to compare us to all the other countries. But we are leading on that front for sure. There's been reports overnight that some of the hospitals in Texas and the southwestern states are at or near capacity too. So it's starting to sound a little bit like how New York was back in March, April, where they needed emergency hospital beds and people really did need to shelter in place just to stop the spread. But we'll see if that actually does happen in those states. There's been some slowdowns in reopenings, but they haven't adopted widespread mask usage yet. And they haven't really sheltered in place as aggressively as a lot of Europe did and a lot of New York did to get over its humps.
And if we take a look at your next chart here, this is a pretty interesting one. It just shows how uneven the return back to work has been.
Yeah, it also shows how uneven the actual reduction in travel was as well. So you've got some countries like Taiwan, number 4 there on the list, where they were really good at stopping cases coming into Taiwan, so that never really became a problem locally. So their economy didn't slow down, and this is looking at Apple Maps movements and requests. So it's actually looking at people's mobility more than actual production. But Taiwan has bounced straight back to pretty close to normal. Sweden, we know, has had a much more open and sort of rational but be careful approach. It's slowed down a lot, but it seems to have bounced back completely to normal. But then you look at some of the economic data, and actually Sweden has seen big reductions in retail spending, big reductions in production. So even though people are on the move again in Sweden, it doesn't mean that their economies are back to full speed either. At the other end of the spectrum, you've got countries like the UK, which remember was a bit like Sweden early on. It was trying to get a herd immunity approach pretty much until Boris Johnson caught coronavirus, and it's now become very conservative. People are still not really moving around much, and the GDP impacts in the UK look like they're pretty significant compared to a lot of the other countries like the US that have got people back to work in a more safe way by using masks and by sort of adopting a safe activities first approach to opening.
All right, if we take a look at our last set of charts here, this is going back to looking at commodities bouncing. And again, seeing copper, for example, that's certainly starting to make its way into the headlines. But even with construction down and certainly running well below capacity, these have quietly made a pretty significant move.
Yeah, so I guess it's in contrast to a lot of the other data that we've been seeing that shows that lots of people are out of work, still not back fully at work. Commodities, I guess, are more affected by things like the construction industry, which has been back at work for longer. But the commodities sold off really aggressively as everybody stopped working. Obviously, commodities have a supply-demand factor as well as an overall level of value factor. So with everybody not working, not driving, not buying things, the mines would still have been producing, just like we saw with oil, just like we talked about yesterday with natural gas. You would have had an oversupply in the short term. Some of the production facilities have shut down with the emerging market cases. With some of the metals, especially with steel, we've actually got some supply chain problems. But it is interesting across the board, from steel to copper to aluminium, all those metals are now back at or above pre-COVID levels. So the market for industrial commodities and things that you would be building with has actually recovered pretty much completely, which seems to speak to things recovering better than a lot of the other data seems to show.
All right, Phil, thanks so much as always for joining us on Trade Talks.
You're welcome, Jill.
All right, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.